Hello again from Core Wealth, and welcome to our report back for the end of December, and we'll also cover the whole of 2019 and how that turned out. We wish you the best for 2020, and we're looking forward to the year and hope that it's a good one for you as well. Often it's quite difficult to separate what's happening in an economy with what's happening in investment markets. 2019 was a good example of this. Our economy, as you would know from the comments we made during last year, was really struggling. Outlook at the moment for the year as a whole, expectations are from different economists, some as negative as saying that the year as a whole will be negative economic growth. The more positive ones are at best somewhere around 0.5% growth for the year as a whole. Now, despite that, if we have a look at the financial markets, the local stock market was up 12%. International developed stock markets, led really by the US stock market, were up over 20%. Emerging market stock markets around the world were up 15%. And our local bond market, again, up double digits, just over 10% for the year. So despite the poor economic environment, the market still generated some reasonable returns and pretty much made up for what happened in 2018, where we saw both local equity and international equities being negative for the 2018 year. The other comment is around the local currency, the rand. That for the 2019 year was actually stronger. So it ended stronger than it started the year. One of the positives that we're seeing in South Africa at the moment is how low inflation is. The latest number is just above 3.5%. And remember, our aim is to outperform inflation over the longer term. In 2019, we outperformed inflation on all of our normal portfolios, although some of the more defensive ones were only slightly ahead of inflation. If we have a look at the portfolios that did well last year, it was our more aggressive portfolios. Those that had higher exposure to growth assets, being local equities and international equities, and in particular emerging market equities internationally. Some of the things that weighed on returns in the portfolios were those managers who were more valuation driven. We haven't seen those returns pick up as much yet, as well as exposure to property. Although property was still positive last year, it was only marginally so, a couple of percent up. Our expectation, if we look at valuations, is still for good growth to come through over the longer term in portfolios. And we've seen pockets of that coming through, particularly our equity managers over 2019. We saw some good outperformance coming through from a number of those, which fed through into the portfolios. So looking ahead, what are the opportunities that we have to make sure we take advantage of? From an investment portfolio point of view, our philosophy remains the same as it has been over the last 11 years, and that's making sure portfolios are diversified and that portfolios are buying stocks and assets that are not overly expensive, so at good valuations. We still see in the local equity market that there's good upside from some good businesses. They're going to have to battle the challenges of economies both locally and globally, but there's good businesses that can be bought at very attractive valuations, and those will unfold through time, which is good for a portfolio. Often when we read things in the media, especially local media, you can get the sense that, we're trapped and there's nothing we can do. And nothing could be further from the truth. We can diversify our portfolios, we can take money offshore, and we can get access to virtually any company around the world. And that again is an opportunity. One can diversify into different geographies, different types of countries, different types of companies. Incidentally, our direct offshore model portfolios have just reached their 3-year anniversary, and their returns have been very competitive relative to peers. And a number of you and a number of our clients, who many of them not even in South Africa, we're managing portfolios for them in those strategies. Well, that was talking about the investment portfolio opportunities. But what about opportunities as an employee, as a business owner, as a retiree? What are the things that we can do and help you with to basically turn every penny over, making the most of every asset and rand that you have. Here's a couple of ideas. We've done a lot of work of late with corporates. Many corporates are sitting with cash on their balance sheets, as well as individuals who are sitting with cash in the bank. If it's part of a short-term portfolio, you don't want to be paying too much tax on the interest you earn. And there's different portfolios that we have that can minimize that and still be invested in cash, but minimize the interest burden, and that then reduces your tax bill and giving you a better after-tax return. So please chat to us if that's something that's important, or that's possibly an opportunity for you as an individual or a company. The other one is making the most of tax deductions. So we're coming to the end of the tax year, at the end of February, and your advisors will be contacting you. But have you made the most of your retirement annuity contributions? Have you made the most of contributions both for you and your family in terms of tax-free savings? Remember, returns on tax-free savings investments, there is no tax on them ever. And these are the kind of things that one wants to make sure you maximize so that your after-tax return is as high as possible. The other tax deduction opportunity is investments into Section 12J investments for those who've got maybe a large tax bill and you have a lump sum of money that you can allocate that will give you a full tax write-off. That is something that could be very helpful in that instance. Thanks for watching. If you have any questions, by all means get hold of us. We wish you well for the year. We're looking forward to it, and we'll see you hopefully at one of our events or when our advisors come to meet with you during the year. Thank you very much.